The CEO of the Kraken exchange, Jesse Powell, is joining us via Skype this afternoon. Jesse, thanks a lot for joining us. I want to kick things off by talking about your guys' latest round of fundraising, $13.5 million. Tell me what you guys want to do with this.
Yeah, thanks for having me. Great to be on the show. So $13.5 million is largely going to go to acquisitions, and that is largely already spoken for. But we've got a very strong balance sheet already. The reason to do the round really was to try to bring more clients into the shares, and really long term we want to align our interests with the shareholders as much as possible, with our clients as much as possible. We see a lot of bad things happen when the interests aren't aligned with the users and the shareholders, and we kind of like to bring those two groups together so the interests can be aligned, and our clients can really benefit from the growth of the company.
Jesse, you did this through a crowdfunding platform, Bank to the Future, BF. You were looking for about 10 million, got 13.5. My question is, why this venue? Why not private equity? Do you have aspirations for public listing at all?
Yeah, so the reason to do this is we really wanted to bring our clients in. So we could do private equity, but then maybe you're just a handful of investors there. We had over 2,000 participants in this round, which is awesome. We'd love to have all of our clients as investors. We've got millions of clients. We really want to democratize access to the company. So private equity, while it's interesting, it's a lot of work. It's a long road show, and then you only end up with a handful of investors. And it wasn't really, we weren't really doing it for the capital. We were really doing it to bring more people in.
Jesse, my question is, obviously on the crowdfunding route, what do the investors, if we were calling them that, get in return, or is it more just like a donation? I mean, there's a lot of fine print on of course, the Bank to the Future page. What do people who went through this funding get in as a result?
Well, I hope it doesn't turn out to be a donation. I hope that the stock does appreciate in value, and that at some point in the future they're able to sell their shares at a profit. But in addition to having the equity in the company, they also get a bunch of free stuff. We also own CryptoWatch, so they get free CryptoWatch accounts. They get to leverage their stock on the platform for margin trading. There's some other special features that they get as traders, which, I think if you invested the minimum amount, which was $1,000, I think that's probably going to pay for itself just in terms of the freebies that you get. If you invested much more than that, I think hopefully, we're working hard. Hopefully you get a return on your equity someday.
I'm curious, though, when you define the equity, though, because the investment does come through the form of a special purpose vehicle, right? So are they technically shareholders?
Technically, they're shareholders in the SPV, which is holding shares of Kraken.
Okay, I see. Now, let's talk here about what's been going on the market as a whole. We've had this big move in Bitcoin. I want to get your take, firstly, if this is something reflective of monetary policy, foundational institutions, something more institutional, or if it's just another run-up and another crash.
I think it's just another run-up and another crash. This market is very cyclical. We see this over and over again. When there's a very quick run-up, there's usually a pullback to follow. And I think what's important is to just look at the long-term trends and not try to pick any particular day. The people that are dollar cost averaging in are doing very well over time. But I think if you're going to day trade in this market, you really got to have strong constitution, because it's up and down 30% on any given day.
Is the rally and the cycles that you talk about for crypto, one of the things I've heard and we've talked about here is that these rallies and crashes in the past always led to higher price rallies. Obviously, a lot of the bulls will point to a logarithmic chart that kind of shows the gradual ascent. So if this one got stopped out at 13.5 or whatever, is it important that we eventually do see higher highs for the $100,000, $1 million Bitcoin case?
Well, yeah, I think if Bitcoin is going to be successful, we're going to see $100,000, $1 million Bitcoin at some point in the future. The question is just a matter of time. When is it going to happen? I think that the regulatory uncertainty in the space is really holding it back. But globally, I think we're getting more clarity around that. So barriers are starting to come down. More institutions are starting to get familiar with it and comfortable with it. And I think it's just a matter of time, really, for the price to achieve new all-time highs.
Tell me about where you guys stand on regulation. You had a blog post last year that kind of sparked some interest in the crypto community that didn't seem like it was begging for regulation, that there's certain types of regulation you want more than others. Where do you guys stand now? What do you need to operate better, more efficiently, or more transparently? What do you need at Kraken?
So we need reasonable regulation, and we have been working with regulators all over the world to shape regulation, to write new regulation. In some cases, we've been successful. In some cases, the whole industry has failed. I think New York is an example of an immense failure. So what we need is clarity, really. So and if we can't have clarity in the absence of specific regulation, at least we want to avoid bad new regulation, bit license being an example of bad regulation. So banks, other payment partners, other financial institutions, they may not be comfortable with a gray area. And in order to, say, bank a company like Kraken or to process payments for Bitcoin transactions, they would like to see some explicit license that just says very clearly, you are allowed to do this kind of activity. And often what you find is when you go to the regulator, they will say, well, you don't need a license to do that. We don't license that activity, so you're free to do whatever you want. And the banks don't really buy that. That's not enough comfort for them. They feel like this seems like it should be a regulated activity, and they want to have some sort of explicit license for it. So, that's a case where having this gray area or where even the regulator has said you don't need a license, the absence of one just scares the banking partners, and that becomes a hurdle for many businesses. And we've seen what happens when crypto companies have to go to shadier payment partners or shadier banks to get their business done, and usually it ends in disaster. So getting this hurdle cleared is a really important thing for us, and we're making progress, but it's just much slower than we'd hoped.
Jesse, I think I heard in there, correct me if I'm wrong, that the efforts by the New York Attorney General you see as being misplaced. Obviously, you've written about this in response to the Attorney General's accusations about Tether and Bitfinex before. I'm curious, though, in the latest run, I'm sure that the crypto bears or cynics or whatever you want to call them, or those just digging under, are going to want more answers on Tether again. I'm looking at a big supply of Tether coming online. The market cap is like doubled over the past couple months as Bitcoin has gone up. I mean, can you give us an update here? Is this legitimate?
Well, I don't have inside knowledge of what's happening at Tether, but I can tell you that historically, when you've seen growth in the supply of Tether, we've seen growth in the supply of US dollars coming on to Kraken, and other exchanges would report the same. So I think what you're seeing in Tether is just a very transparent reflection of what is happening at the banking system level and with all the exchanges. When new Tether is being printed, 99% of the time, it's tons of new US dollars are coming into the exchanges as well, and it's just not being represented as Tether on a blockchain. So recently, we've had massive inflows of fiat currencies. So I believe that the Tether prints are a result of new fiat coming in.
Okay, so this previous reports, obviously people have dug in and said, look, there are participants who know that Tether is going to be made, so there's a way to sort of artificially inflate Bitcoin. You don't see that happening in this? Do you see the transactions on your exchange all making sense and looking legitimate?
Well, for us, for sure. We only have one Tether pair, and that's Tether dollar, US dollar. So you can only trade Tethers for dollars on our exchange. Everyone else is funding with real US dollars, or they ultimately go into US dollars to trade for Bitcoin. So I don't feel like Tether is artificially inflating the price of Bitcoin. I think Tether is actually a small part of the total fiat supply among all the exchanges. So I don't think Tether alone is doing it. And I think that the Tether that's being printed is mostly reflective of actual dollars coming into the system. So I think that you could just look at it as new dollars coming in is what is driving up the price. It's new users coming in. There are days when you see the price, going up 10% a day, you can bet all the exchanges are onboarding, 50, 100,000 new users a day. That is what is driving up the price. It's the huge retail demand and all the media attention on it. It's not Tether.
One last question about it, Jesse, because you are one of the few exchanges, obviously, that have the direct trade between USD and Tether. My question is, you've made subjective calls to delist things in the past, like with BSV most recently. If the inquiries continue into Tether, if we get an update from the AG, would you consider taking that off the exchange?
Well, the New York AG doesn't oversee Kraken's business.
Right.
Kraken doesn't operate in New York. It seems like New York has multiple regulators that are interested in this. There's obviously the New York Department of Financial Services that actually regulates this, and then there's the New York AG, which has taken a special interest, I guess, as a second regulator of the space. But obviously, yeah, if we keep an eye on what's happening all over the world with all the assets that we list, and if we feel at any point that the asset turns out to be a scam or is not something we want to expose to our clients, or we feel like there's not even a role for us to provide a market for price discovery, then we might delist. And we've delisted some things in the past, like you said. I think that there is a place for exchanges, even things that are controversial. I think it's useful for the market to have that price discovery so that you can price that risk. People can disagree and they can place their bets. To delist something is to simply remove the market for it, remove people from having access to put their money where their mouth is, and then you don't know what the price really is. You don't know what's happening. You don't have a way to exit your position if you've lost trust in the offering. So, I would like for exchanges to be more of a neutral platform. They don't have to make these kinds of decisions about what to have listed. But we do, I think, go above and beyond and try to look out for our clients and try to only list legitimate projects that we think have some merit. Okay.
Jesse, appreciate the insight, a good conversation here, a little bit more on the market structure as opposed to the price conversation as always, but we hope you'll rejoin and we can have that discussion as well. Jesse Powell, really appreciate you being here. Thank you.